Okay, g'day everyone. Welcome back. G'day Diana.
Hey Shane.
How you doing?
I'm pretty good. How are you?
I'm good. So here we are in the midst of the profit reporting season in Australia, which always creates lots of excitement. I'm really excited.
Wait, why are you excited?
Well, to see how it turns out. It's one of those puzzles in economics and finance. You've got to see how the profit results come out.
I sort of just think sometimes the individual results, unless you've got a big investment in a particular company, or of course if you're employed by them, or you're thinking about whether to buy that particular stock, all the ups and downs sort of wash through.
Well, they probably do. Yeah. To be honest with you, that's a typical economist way of looking at things. You just look at
most economists wouldn't even look at the profit reporting season.
Well, I think I started because we work for a company that's involved in investment. I started looking at it in detail about 20 years ago. And at the end of every day, I'd tabulate every result in terms of whether profits are up, how the share price returned on the day relative to the market, dividends, and also their guidance.
I know the Excel spreadsheet is quite mammoth.
Yeah, quite mammoth.
And very manual. Well, until me came along and automated everything.
Automated it all. It used to take me about an hour a day through profit reporting season.
I think you're probably the only economist in Australia that did that.
Yeah, but I kind of think sometimes you've got to get down and dirty. You've got to get in the data, get into the nitty gritty.
Yeah, that's true.
But you often get a good handle on things when you...
Hang on, the takeout from that was Shane likes to get down and dirty.
That's right. Like it's worth knowing that Breville's doing well because of coffee machines, or that maybe JB Hi-Fi hasn't done so well recently. Their sales are down.
CSL's been doing really well.
They have, so it's all over the place. So I guess that's the reason you only want to look at the aggregate. The numbers so far have been okay. Profits sort of running, I think, are up about 12%.
Isn't this our best profit reporting season in like 4 years?
It is. We've had 3 consecutive years in a row where profits in Australia went backwards. Now we're seeing a big turnaround. The only thing is that turnaround is concentrated in the big miners and energy. So that they've had some rough years. Now they're starting to see profit grow again, and that's pulling the average up. Is
that just because of high commodity prices?
Well, I think it's come off a period where commodity prices were super high a while back, then they came down. Now they're going back up again. Volumes have picked up, and so they've seen their fortunes turn around. So the overall, I think if you strip out the banks and the resources stocks, overall profit growth's running around 2 or 3%.
So the banks are still doing okay as well, aren't they?
They are. They're up about 8%, I think, or something like that.
Even though they're sort of the most expensive banks in the world from like a price to earnings point of view.
Yeah. Well, the problem for the banks, of course, is that we know that the property market is cooling down, and so that leads to slower growth in bank lending for housing finance. I think the average bank has been saying if there's a 50 to 20% drop in housing finance approvals or commitments since the budget. And that, of course, is like a big chunk of their business. So that's why investors are a little bit nervous about the banks. But the big puzzle in all of this is that we've got profit growth. Okay, we're going to get, say, 11, 12% for the last financial year. Underlying stock outside of the banks and the resources sector is, say, 2 or 3%. Whereas you go to the US, profit growth, the last set of numbers I saw was about 33%. And if you allow for asset write-ups at Alphabet and Amazon, I think it's something like 50%.
Yeah.
Which is super
So you can't really
strong.
compare the two. I mean, Australia and the US, you just sort of think, well, why would I want to have any exposure to Australian equities when you can get so much better potential profit growth, which should be reflected in the share prices in the US?
Well, probably. Even in Europe, I think profit growth is 20%, and this is part of the world which seems to be flat forever. Not very strong growth. But their profits are up 20%. Japanese profits are rising solidly. I think the problem for Australia is that we don't have a lot of exposure to AI, companies that are making the bits that go into AI or creating the AI.
Yeah.
So that's holding us back. I mean, normally you would say that if we're producing 10% profit growth, that's pretty good. It's just that the other parts of the world are doing a lot better.
What about when you account for dividends? Because Australia has historically had pretty high dividend yields compared to the US. Usually it's like 4.5% here. Compared to the US, it might only be something like 2 or 3. And then you include, if you're an Australian investor, include the benefit of franking credit. So once you include all of that, does Australia still underperform, do you think?
I think we still underperform in terms of total return because the dividend yield has fallen to about 3.5%. So it's around the lowest level it's been in a long time. I mean, mind you, dividends are still rising, so that's good. But the dividend yield has fallen. But it is correct. If you take the dividend yield, add on the franking credits, you're probably around 4 to 4.5%. All you've got to do is get capital growth out of the share market. Rise in share prices of say 4.5 to 5, and you've got a total return of 10%, which is not too bad. It's just that right here, right now, global shares are doing better. I think the answer to the question, or the implicit question there, well, why bother with Australia? The rest of the world is doing so much better, is that every so often Australia goes through a period where it outperforms. And if you go back to 1900, this is where I like to get dirty again. You get all the data back to 1900, Aussie shares are actually one of the world's best performers over a long period. But we do go through decades where we're a relative underperformer, then we go through decades like the 2000s where we're a star performer.
It sort of seems like the next few years might still be a bit flat for Australia given the relative tech underperformance in the share market, but also some of the post-budget fallout. I don't know if it will make domestic investors concerned about investing in Australian listed stocks because they think maybe growth is going to be flat here, or that you're not going to get that same sort of returns given higher taxes.
Yeah. But I thought I was the negative one on the budget and you were the positive one.
I know, but I always like being a contrarian to whatever you're saying.
It's a reasonable question that the capital gains tax changes do make investing arguably in Australia a little less attractive than it was before.
But then I guess it would also make investing less attractive even if you're buying global shares because you'd still be taxed on the capital gains that you make on those.
That's true. And some would say, well, we're just returning the capital gains tax approach to what we had prior to 1999 and it wasn't too bad.
The sky didn't fall down then.
The sky didn't fall then. I mean, I have some my concerns were not so much in the aggregate. It's just the way the capital gains tax treatment applies. I mean, Keating enabled you to smooth your capital gain over 5 years. And if you can't do that, you can end up paying a much higher tax rate than an ordinary wage and salary earner because you can't spread it out. And the other issue is that the way it sort of works, it could lead to less interest on the part of investors in growth stocks. It biases investors towards dividend or high yield paying stocks who tend to be more established blue chip stocks. So therefore it could reduce the growth dynamic in the share market. So those things worry me a little bit about it. But I don't know that it drastically changes the attractiveness of the local share market versus global shares. And you can make an argument that makes shares more attractive than property.
Yeah. Well, the Reserve Bank has been talking more recently about how the budget changes and the decline in interest from investors and investor lending now for housing has made the property market look a bit worse than they expected. And some are saying that that's a reason why they decided to hold rates steady. I mean, I think that it's a lot broader than that the inflation data wasn't strong enough to sort of demand an instant rate hike from the Reserve Bank. But they're still sounding like they're quite worried about the inflation outlook. I mean, the underlying inflation numbers are still 3.6%, obviously way away from 2.5%. So even though the latest inflation data for June looked a little bit better, it's still way too high.
Yeah, that would have been my view. I guess I could be criticised because a few years ago I was more dovish and now I've become a bit more hawkish. And I guess that's because I've become more worried about inflation getting stuck in the Australian system. Whereas if you go back a few years ago, it looked more like a temporary thing, whereas now here we are. We're looking at 5 years out of 6 with inflation above target, which is not so good. But I think the Reserve Bank, the signalling from the Reserve Bank is still fairly hawkish, still fairly concerned about things. So that's why I think they'll probably still hike again.
But given that inflation is so high at 3.6% on the trim mean, one of the arguments that has been posed is that they should be raising rates right now. Like even if their forecast was 3.7 and it looks a bit better at 3.6, we're so far away from our inflation goals. And on the RBA's own forecast, it's going to take at least another 18 months before we get to 2.5% or even close to that level. So why not just get the job done now? The labour market is strong. Well, it's in relatively good shape. Maybe not as strong as it was a year ago, but we've still got positive employment growth and GDP growth is still doing okay, why not just
get it out of the way?
Yeah, get out of the way.
I mean, that's a reasonable argument, but I mean, that argument was made quite forcefully by some of the people in the media after the decision to leave rates on hold. I mean, one of them even compared you and me and the other market economists out there to nothing more than astrologists.
Well, not by name.
Not by name, but yeah, it immediately got me a bit concerned because I think there's something in astrology. I can't. Why has this guy got a problem with astrologists?
So you read your horoscope every week?
Well, not every week. I'm not a great fan of that one, but I think there is something in astrology to the extent that I have a lot of the characteristics of a Leo.
Okay, but when you read your horoscope, can't you?
Yeah,
like,
but
it's just basically like saying, oh, there's a little bit of good in something that, in whatever it is that you do. If you're looking for a new job, oh, maybe there'll be some opportunities there. If you're looking for love, keep a lookout for the right person. They always try and give you something positive to hope for. It's always the same. It's crap.
Oh, come on! You got to be. What are you a great fan of Carl? Kyle, is it Kyle? Kyle Sandilands.
Kyle Sandilands.
Yeah, Kyle Sandilands.
I'm not a fan.
Next,
of
you'll
Kyle.
be accusing me of being Jackie O. And saying,
You'd be off with the fairies.
I'm off with the fairies. I'll have to get out of here.
But you are a bit off with the fairies. You're into your crystals
There's nothing wrong with crystals.
and into horoscopes and stargazing.
I don't really read horoscopes, but I have bought several books on astrology, and I think there is some value in it. Do I use it for forecasting? Well, not much, but
But maybe we should.
maybe we should. But I just don't work out what is the problem this other economist has with astrologers.
I mean, the problem is that they just talk rubbish, really.
I don't know. That's a bit too harsh. I think that's a bit too harsh. I think we'll have to take this up with our employer. We could be wrapped up in the courts forever debating this issue. But in any case, I think the problem for the RBA is that they've got a massive amount of information. They've got to make a judgment as to what to do here and now. I reckon there would have been lots of people there in the RBA, and there may have been some in the boardroom discussion arguing for a hike, just get it over with.
But it was a unanimous decision.
I know it was said to be unanimous, but I'm sure they had a decent debate about it. In fact, the governor said that we considered a hike or a hold, so they probably would have gone through.
Well, obviously. What else would they have been considering, a cut?
Well, in the previous meeting, she said they only considered a hold. I don't know how you quite debate a hold if that's all you're debating, if you know what I mean.
Yeah.
You either debate one or the other, but anyway, it's the RBA would probably say, well, we've hiked rates 3 times already. Yes, inflation is still above target, but it's not quite as bad as we thought it might have been. It could be starting to go in the right direction, so let's give it the benefit of the doubt and wait for another couple of meetings to see what it looks like then. And in the meantime, we can say that there is evidence of cooling demand in the economy. The housing sector's cooling down. People feel less wealthy. They spend less. The jobs market's a bit weaker and so on. So I can sort of understand why they've come to that decision. That's why I wasn't so critical of them.
Yeah, and I guess I'm not too critical of their point forecasts either. You put out a note this week about how you shouldn't focus on point forecasts, but the whole point of economists or forecasters is to sort of give you, maybe you can say this in a better way, I guess, like some sort of pathway for how to think about things, or like sort of like a guiding star as to where you think that you will be in a few years' time. Whether it's 3% or 4%, at the end of the day, it doesn't really matter. But it's the trends that are important, and also points in the cycle. Like if you're at
That's right.
a point in an upturn, or
So therefore, you
if you're
shouldn't
at the
get too
bottom.
obsessed with point forecasts.
I guess to think about it in a different way then, but isn't the RBA's whole job to meet 2.5% inflation? So they are reliant on point forecasts.
Yeah. Well, I think that the person before who was comparing economists to astrologers, or saying that they're astrologists masquerading as market economists, part of the argument in there was that the RBA shouldn't rely on forecasts, that they're forecasting that inflation will come back to target, that maybe they shouldn't be doing that. Maybe they should just be saying, well, inflation's above target, therefore we've got to raise rates. But to me, there's still an implicit forecast in all of that analysis.
Yeah.
You're saying that if you've got inflation above target, if you don't raise rates, then inflation will just stay above target. There's some sort of implicit forecast in that. Likewise, the RBA, even if they didn't make a forecast, they could say, well, we have hiked 3 times already. There is evidence that demand is cooling and therefore over time inflation will slow. So they're not making a point forecast, but they're still relying on a forecast to some degree. Whichever way you cut it, the RBA has to rely on some sort of assessment or forecast in undertaking their analysis. I guess the point I was trying to make is that in investment decision making, I think it's very dangerous to rely on point forecasts from economists. Economists can provide you with some guidance as to where we are now, where we might end up going, what the risks are. I like to be seen as putting things in context because so often, the story is about the sky's going to fall, it's all terrible. We weren't wiped out by the tariffs. We've survived the war with Iran so far anyway. We've got El Nino coming. There's always some disaster around.
There's always more negatives than positives.
Yeah, whereas I like to say, well, that's true and these are all the issues around that. But just bear in mind, we've seen lots of these things before and they come and go and it's not the end of the world. And I think there is value in providing that assessment. So let's move on to something. So we've covered the RBA. So what do you think the RBA will do?
Well, do I have to go with our house view?
Well, you don't have to.
I guess my bias is that they'll still hike rates again because I think the inflation dynamics aren't going to look that much better in a few months' time, especially on the wages front. Wages growth is actually going to start ticking up again rather than moderating from here.
So the latest data was 3.2% for the year to June.
But the components were still pretty good. Like there's still quite a decent, there's like 70% of people who are still getting a wage rise of 3% or more on average. I mean, a lot of that has been in the public service recently, particularly the state governments. And there's other bits in the inflation figures that are a bit concerning. Rents and construction costs are still elevated, but more so than that, I think it's the discretionary parts of the market, like holiday spending, personal care services. Consumers are saying one thing when they fill out sentiment surveys and saying, they're feeling quite depressed and they don't want to spend on items, but they're doing something different. So watch what they do, not what they say.
It's a bit like that article we were just talking about where Australians say that they love Australian film content and then they don't watch it. They watch foreign stuff. It's the same with, we want foreign-made products in our supermarket and then when Australian-made products are put there, they'll just go and buy whatever. They'll buy the foreign product.
I actually boycotted some American products the other day. My kids like these, like Cocoa Pop type of things, but I don't like Cocoa Pops because it's full of preservatives and flavour. And flavourfuls, You
like the Fruit Loops, do you?
They're even worse. I don't let them eat any cereal besides Wheat Bix, but at the health food shop, there are these Star Pops, which is meant to be like a healthier alternative to Cocoa Pops, and like once in a blue moon, I'll buy it for them when I'm in a good mood. And there's less preservatives, but it's, with cocoa. Anyways, but they didn't have these Star Pops. But I saw a different brand, and I just picked it up quickly. It had a koala on the front. I was like, oh, surely it'll be Australian. I just picked it up, went to pay for it, and it was like $15 for a box. No, it was $12 for a box of cereal. And I was like, no, I'm not paying for this. I put it back and I realized it was American. And also, I didn't want to pay that much, and two, I don't really want American product, even though it was FDA organic, but I just don't really want to support them right now.
Well-meaning American farmers.
Yeah, sure, fair enough.
Have anything against us.
I just prefer Australian products. So I'm one of the people that prefers Australian.
But I tried to do that. I was buying my Holdens, Fords and Holdens, and then everyone would say, oh, yeah, we want Fords and Holdens, and then guess what? I'm the only one buying them, and then no one buys them anymore. They go off and buy something else.
But that's because it's a big ticket item and the cost of cars made foreignly are so much cheaper. Most people would have agreed that
the Commodores that were being made in 2017 were amongst the best cars available. But of course, everyone had gone off to something else.
I just think because the cost of manufactured goods from overseas is so much cheaper. Not food, but the manufactured stuff. Like go to Kmart and you can buy toys for $5 or $10. That was never around 10 or 20 years ago.
Yeah. We can get a Temu and get stuff real cheap. The funny
it all comes from there.
Yeah. I mean, the funny thing about Fruit Loops, there's this petroleum-based food colouring. So the problem with food colouring is that some of it can be petroleum-based and it's not particularly healthy for you. So the Europeans banned it. And so Fruit Loops in Europe, they're those colourful little things.
Yeah.
They were a dull colour. And in America, they said, no, we want choice. It's individual choice. No government intervention here. And they stuck to the bright Fruit Loops because they wanted bright Fruit Loops. But in the meantime,
I didn't know
they're
that.
consuming petroleum-based food colouring. So I don't know what's happened to them in Australia, but the petroleum-based food products, food colouring is not particularly healthy.
Yeah. I mean, you could sort of research this forever because there's so many different regulations about pesticide use in fresh food and then different things like chemicals. So it's hard to know sometimes.
Anyway, we've gone off track.
We have.
A little bit here.
Okay, so we did get a bit off track. We were going to talk about super because it's been in the news this week. I came across an economist talking about how in the current cost of living crisis, maybe one solution is for businesses to actually increase how much super they give to people, reduce people's take-home pay, so people ultimately effectively getting a bit of a wage cut, but in the long term, it doesn't actually impact their wealth or their income.
Well, that makes economic sense. That idea is not a new one. It's basically, I guess, a form of counter-cyclical fiscal policy.
Yeah, so instead of just relying on the RBA, basically.
And just relying on the RBA, when demand is strong, you take money away from people. You raise their tax rates, or you cut government spending, or you increase the superannuation contribution out of their salary, or another one is you increase the GST, from 10% to, say, 12%. And therefore we have less money to spend, and that means less demand in the economy. The problem with these things is that it's hard to see a government actually doing that because it's politically unpopular. You can imagine the outcry if the government says, well, you're spending too much, there's a cost of living problem, living is getting more expensive, therefore we're going to take some of your pay away from you. That probably wouldn't go down too well, even though it is going into your super.
But what about if individuals decided, if it was like once a year you can change how much super you're getting relative to your income? It's like instead of getting 12%, maybe I can get 8% and then take the rest as my home pay and just allow that lever to occur, I don't know, once a year.
Yeah, but I reckon a lot of people would, when you're young, because when you're old, you're focused on retirement. And so you've got a few years to go. So you think, I want to maximise the amount of money in there. And it's also taxed at a more concessional rate. So the average tax rate Australians pay is 30 cents in the dollar. Super, when the money goes into super, is taxed at 15% and the earnings on it are taxed at 15%, which is less than your 30%, which is good. So when you're older, you probably don't mind it going in there. But I reckon if you're younger, anyone under 45, they'd probably all be opting for having less in there, which would defeat the purpose of having super in the first place.
Well, you could still have a minimum in there. But, like another 5% of my salary, I would take that right now.
But 12% is the minimum.
I know, but you could have yes, people are getting paid 12%, but, once a year you can change it to a minimum of 5% and use the rest. I don't know. Just another. But then I guess the other point, the other side of the debate, which got confusing, was that one side is saying maybe we need to increase super. And then you saw another side of the debate, One Nation, Pauline Hanson, saying that we should be allowing people to take money out of their super. Yeah. In this current cost of living crisis.
Well, I think One Nation's still working on their policy. I've seen different versions of that. One was that you should be able to use your super fund to buy into your home with you. So effectively it's part of your super fund. And the other one was, there were some comments about actually getting access to super for cost of living pressures. I mean, the problem with all of those things is that they just push up prices. It's all right for you to take some money out of your super and use it as a deposit to buy a home. But if everyone does the same thing, then it just means that you're all going to pay more for property. You'll all have $10,000 extra, $20,000 extra, and that'll be fantastic for the baby boomers like me because our properties will just go up in value. And so young people won't benefit at all they'll end up with is a lower retirement balance.
So at the end of the day, it's best just to leave super where it is. It's for the long term. It compounds.
That sounds good. I guess a cynic would say, well, that we work for AMP, that's what we would say. But common sense investing would suggest that the best thing to do is to leave it in there for the long term. It'll compound to give you a good retirement nest egg. You occasionally hear this argument, well, it's my money, I should be able to do with it what I want. That's fair enough. Counter to that is, I guess, well, you are actually getting a tax break on that money. It's being taxed at 15%, not your marginal tax rate. And maybe if you want to do what you want with it, then maybe you shouldn't get that tax break. So then I think you could end up with a situation where we go back where we were pre-compulsory super, where if you work for a good white-collar company, you get paid super and you get advantage of the tax break, whereas a lot of ordinary people won't get that tax break and end up worse off. So there's arguments to and from on this one, but Australia has benefited dramatically from super. It's given people decent retirement income. It's given us patient capital to invest in the overall economy. It's meant that we don't have this chronic reliance on foreign capital to keep the economy going like we used to.
Yeah, I agree.
I know it sounds like a lecture, but I think super has been good for Australia.
Okay, Shane. Well, that's it for this week. See you next time.
See you, Diana. It's been fun. Check out the Fruit Loops when you go to America and Europe. Compare the different colours.